Greetings, everybody. Welcome to Liberty Call. Today is Tuesday, April 18th, 2023. Hope everybody's having a great day out there. My Astros won last night. Did a pretty good job against the Jays. So a little bit happier after the losing 2 out of 3 to the hated Texas Rangers over the weekend. But anyways, it's a beautiful day here in Colorado. It is, about 63 degrees outside, according to my computer screen. And my boy Jake is, well, you can see him kind of back here over my shoulder. He's out cold under the printer. So, all right. Well, if it's your first time watching Liberty Call, you're here. Excellent. I'm glad you're here. We're going to talk about some financial crap and talk about the market. The housing market seems to be stabilizing, and the debt ceiling, which is a big thing they're talking about in the news. Everybody's all freaking out because the debt ceiling is, well, I think they've already crossed it. If I remember a couple months ago, because I remember Janet yelling, that dumb, ugly owl, talking about, we might default in June, blah, blah, blah. Well, we're halfway there. So, all right. If it's the first time watching Liberty Call, please give me some thumbs up, likes, shares, subscribes, follows. All these buttons along the bottom, down here, press one, press them all. I don't care, except the thumbs down. I don't like that one. So, all right. Let's go ahead and jump into the numbers for today. The Dow Jones was flat, down 0.03% or 10 points, closed at 33,976. S&P 500 was up 0.08, also flat, closed at 4154. NASDAQ down 0.04, closed at 12,153. VIX was down 0.53. It's currently down to 1686. So I guess people are thinking that, and this is something that was talked about in a recent podcast I was listening to dealing with financial stuff. And they're like, the VIX is way down and I don't understand. And this is someone else talking, they're like, I don't understand it. I mean, we are, on the brink of chaos and, the volatility is like, no big deal. So, this person was thinking that people are going to get caught with their pants down, unfortunately. So, all right, jumping back into the numbers. Canada was up 0.21. Brazil was up 0.03. Mexico was down 0.67. Going across the Atlantic, Germany up 0.59. UK up 0.38. France up 0.47. Netherlands up 0.61. Spain up 0.46. Italy up 0.69. Switzerland up 0.42. And Portugal up 0.09. So it looks like the bulk of the big countries in Europe, all green today, looks like about 0.5%. Russian exchanges both green today. MOEX up 0.75%. RTSI up 0.62. And the overnights in Asia looks a little more mixed. Starting out with the Nikkei in Japan was up 0.51. Australia down 0.29. New Zealand down 0.56. In the Chinese markets, the Shanghai was up 0.23. The Shenzhen Component up 0.04. China A50 up 0.53. DJ Shanghai up 0.11, Hang Seng down 0.63, and the Taiwan weighted came in down 0.59. All right, so looks like the European markets are probably the best. Most of them, like I said, were up about 0.5% or more. We were flat here mostly in the Americas, and Japan the Asian markets were kind of mixed, but nothing too terrible. So. All right. Well, that was the markets for today. Let's go ahead and go over to the market recap. S&P 500 struggles for direction as investors weigh mixed quarterly results. If you remember from yesterday, we had lots of quarterly results coming out this week. So let's see what they have to say. Get my notes here. All right. On Tuesday, the S&P 500 struggled for direction as mixed quarterly results and a struggle in big tech weighed down the market. Bank of America reported upbeat quarterly results, beating both top and bottom lines, while Goldman Sachs reported mixed results and fell more than 1%. Goldman Sachs' first quarter revenue fell short of expectations due to the sale of consumer loans in its consumer business, Marcus. Meanwhile, Johnson & Johnson lifted guidance and reported better than expected quarterly results, but the company also flagged the hit from lawsuits alleging its talcum products caused cancer persists. So, all that baby powder that was smeared on my butt nearly 50 years ago. I hope I don't get ass cancer from that. Let's see here. Lockheed Martin Corporation also reported first quarter results that topped expectations, underpinned by supply chain improvements, sending its shares up more than 2%. However, big tech gave up gains, with Google leading to the downside for the second day in a row, despite Wall Street downplaying the risk that the search engine giant could lose Samsung as a partner to Microsoft. The New York Times reported on Monday that Samsung was mulling whether to ditch Google's search engine from its devices for Microsoft's Bing. UBS said it's highly unlikely for Samsung to lose Google as a partner, and any such discussions would more than likely be part of negotiation tactics from Samsung to get more leverage and add revenue share negotiations. Netflix gained nearly 1% ahead of its quarterly results due after the market's close. And what I'm kind of curious about with this, I mean, I bring up my phone here. I mean, what's to stop someone from just going to their browser and clicking Google? I mean, seriously, I mean, it's not that hard. I don't know why. I mean, I never even used the Google search icon on my phone. So, anyways, not important. Alrighty, back in other news, Southwest Airlines company paired some losses, but remained in the red as technical issues forced the airline to ground flights, leading to hundreds of flight delays. The mixed results in the market, along with the struggle in big tech, made it challenging for the SP 500 to find direction today. All right, so again, kind of a day. It kind of feels like, from my position as someone who watches markets all day long, reads all this financial crap, and has to sift through all of the BS and the bias that's typically in a lot of these journalist articles. But it feels like we're just on the edge of something really bad. I just don't know what it is, but again, it's just kind of an intuition. Having been in this field for a decade and a half, you just kind of get gut feelings every once in a while that something ugly is around the corner. That's the way I felt going into 2020. I was like, we are way beyond, this bull market is way long in the tooth. And, we are more than due for some sort of, correction, bear market. Something bad's going to happen. And, it was starting, and then, COVID gave the perfect excuse to paper over the economy with lots of money. And we don't know what would have happened had we just allowed the markets to do what they were going to do anyways. So, all right, next up on the docket, housing. U.S. housing market stabilizing as single-family home building permits surge. All right. U.S. single-family home building increased for the second straight month in March, according to data from the Commerce Department. The improvement in the single-family housing market was likely due to a retreat in mortgage rates. Single-family housing starts, which account for the majority of home building, rose 2.7% to a seasonally adjusted annual rate of 861,000 units. Last month, single-family home building increased 4.4% in the Northeast, and soared 23.6% in the Midwest. It advanced 4.8% in the densely populated South, but plunged 16% in the West. However, single-family housing starts dropped 27.7% on a year-on-year basis in March. And the Federal Reserve's aggressive interest rate hikes have pushed the housing market into a recession, with residential investment contracting for 7 straight quarters. There are, however, signs that the housing market is stabilizing at very depressed levels. The National Association of Home Builders / Wells Fargo Housing Market Index climbed to a 7-month high in April. Mortgage rates have fallen from last year's highs, with the average rate on the popular 30-year fixed mortgage declining from a peak of 7.08% in early November to 6.2% last week, according to data from mortgage finance agency Freddie Mac. Those rates have decreased in tandem with U.S. Treasury yields on hopes that the Fed would not continue raising borrowing costs beyond next month, amid signs that the economy was slowing. Okay. Single-family building permits jumped 4.1% to a rate of 818,000 units in March, a 5-month high. They rose in the Northeast, South, and West, but were unchanged in the Midwest. However, permits for housing projects with 5 units or more plummeted 24.3% to a rate of 543,000 units. And overall building permits dropped 8.8% to a rate of 1.413 million units. Starts for housing projects with 5 units or more decreased 6.7% to a rate of 542,000 units. Multifamily housing construction remains underpinned by demand for rental accommodation, but economists see limited scope for further gains, noting an increase in empty apartments. With the decline in multifamily housing offsetting the rise in single-family projects, overall housing starts fell 0.8% to a rate of 1.42 million units last month. The number of houses approved for construction that are yet to be started declined 3% to 291,000 units. The single-family home building backlog fell 2.3% to 130,000 units. the lowest level since February of 21, while the completions rate for this segment rose 2.4% to a rate of 1.050 million units. Whew, that was a lot of numbers. But basically, housing is, looks like it's maybe stabilizing a little bit, even though it is down. Granted, depending upon where you're at, where I'm at in Colorado, home prices really haven't dropped too much. Granted, I'm out in the sticks. If you're in somewhere like Florida or Texas, you probably haven't seen any sort of price deflation there. But because people are less nuts, you have less blue-haired weirdos that want to do weird things to your kids. So, all right. Let's move on to our last article. It has to do with the debt ceiling. We talked about that a little earlier. U.S. debt ceiling deadline could be sooner than anticipated. Banks warn. Oh no, what's going to happen? Analysts have warned that the U.S. government's deadline to raise the $31.4 trillion debt ceiling may be sooner than expected, which could result in short-term debt limit extension. Goldman Sachs analysts have suggested that weak tax collections so far in April indicate that the so-called X date, when the government is no longer able to pay all of its bills, may be reached in the first half of June. The Treasury Department has warned that the federal government could reach the moment when it no longer able to meet its financial obligations as early as June 5th. Sweet. Man, if the government defaults, that means I don't have to pay taxes anymore, right? I hope. Meanwhile, the Nonpartisan Congressional Budget Office, sure, nonpartisan government, has forecast that this moment could come sometime between July and September. The yield on the 2-month U.S. Treasury bill jumped on Tuesday to its highest level since at least 2018, as unease about the U.S. debt ceiling and the likelihood of another interest rate hike took hold. The cost of insuring U.S. debt against default for 1 year stood at about 95 basis points as of Monday, according to Refinitiv data. On Monday, the U.S. House of Representatives Speaker Kevin McCarthy, spineless wuss, outlined spending cuts his fellow Republicans would demand in exchange for voting to raise the debt limit. Analysts at Citi said they expect a short-term deal in June or July as the debt limit deadline comes into better focus with additional tax receipts data. Analysts at Goldman Sachs expect to see somewhat greater pricing of debt limit risks in financial markets. According to John Madzier, head of U.S. Treasuries and TIPS at Vanguard, investors would seek to avoid holding securities in the new time frame. In 2011, a standoff over the debt ceiling triggered the first credit downgrade of the U.S. government. Goldman Sachs had projected the Treasury would exhaust its cash and borrowing capacity by early to mid-August, but the weak April tax receipts could pull that deadline forward. Yeah, I guess people aren't paying their taxes as willingly now that money's getting tight around the country. Don't use the word nation. The United States is not a nation; it's a federal republic. Each state is sovereign. So, nation signifies one union, which we are not. So, anyways, all righty. Well, that's everything I had for today. If anyone needs anything from me or wants to give me a call to get their finances back on track, go to dsafinancialgroup.com. All my contact information's there. I hope everyone has a wonderful evening, and I will talk to you next time. Adios.